divergence than what we saw in the S&P 500. So perhaps keeping price bottled up a little bit underneath that resistance. Now, the Russell 2000, a different story entirely. Long sideways trend, a little bit of an intermediate term downward movement as it broke out of the top of the channel and then back into the channel, bouncing up off of the bottom of the channel, but up over about 2.43% for the week on the Russell. We get a bounce down, though, from this midpoint range where that 200 period simple moving average is. And it comes back down off of that 200 period simple moving average right around that 22.95 mark. Notice that the 200 and the 50 are flat and parallel to one another. That suggests that we're seeing overall an extension of this generally sideways movement that we've been seeing in the Russell 2000. Today's candle, a little bit of a spinning top candle, suggesting some perhaps equilibrium, if you will. The question is there the possibility of a bounce? We're seeing the RSI reversing lower from that mid-range, so sentiment kind of falling away. We might see this come back down and retest that lower channel line before we see it break up above that midpoint right around that 22.95 mark. Scott?
Got it, Ben. So takeaways, good week overall. And I was just looking at your chart of the S&P 500, and it looks as though, Ben, we finished this week strong, for sure, but we're almost just a stone's throw away from the all-time highs.
Right.
Dow Jones did pretty well as well. NASDAQ's getting close to its all-time highs, but that Russell, you're absolutely right. That seems to be lagging. It's still got a pretty good distance away from that all-time high. Well, Ben, thanks for helping us break down the charts here at the end of the week and sharing some good takeaways, I think, for all of our viewers. Ben, have a great weekend. We look forward to joining us again next week. All right, for the next 2 minutes, let's take a quick look at some of the example trades that we put on this week and see how those fared. So join me on the Monitor tab of the Thinkorswim platform. I'm going to go right to the activity and positions. And let's start off with MongoDB. This is an example trade that we put on. Remember, if you click on the quantity, it tells you when. That was the 3rd. That was last Friday. And, of course, then they had earnings this week, early in the week. And here's what we did. We sold a 540, 545 call spread, and that was filled. It looks like we got it filled $2. I'm thinking that's probably above where it was actually trading, because sometimes you will get fills in paper money if there's some sort of aberration, if you will, in the bid-ask just temporarily. Sometimes it can fill there. So that was a good fill. I imagine in a live paper or live account, we would not have gotten this filled at as high a price. But nonetheless, let's see what the stock did. We wanted to stay below 540, 545. So anyone who looked at this kind of trade did not want to see the stock go above 540. Where did it finish? 507. All right, so that option spread expired worthless, and the maximum gain was realized in that point. Then the next one was Campbell Soup. Let me open up that one. I'll close down Mongo and take a quick look here. Now we sold the 340, 330. The 40.39 put spread. We sold that put spread. And again, this is one strategy that would align with a trader who thought the stock would not go below 40 after its earnings came out. And sure enough, it did not. It went higher. It's up at 43. So another case of put spread expiring worthless. And this one was sold, I think, for 30 cents. So that's about a $30 maximum gain was realized, of course, minus any transaction fees. What was after Campbell Soup? Restoration Hardware. Let's take a quick look at that one. I'll open that up now. This one's similar to MDB in that a 635, 640 call spread was sold with the intention of, or at least from the trader standpoint, of the stock not going above 635. And look where it finished, 603. Now, it did get up close to that 635 level, so we had to watch this one closely. But it did finish lower at 603. So again, this one, just like the other two, expired worthless, and the maximum gain was realized. This looks like it was sold for what, about close to a $2 gain, or something like that, somewhere in that price range. Remember, you can always go back to the account statement and look at trades that you did over the last 7 days. So if you want to see where you sold something, like RH shows a $1.70 credit for that particular one. But that's a quick way to always go back and check. Now, we have just a few seconds left here, so let's keep going with this. Facebook. I'm going to open that one up as well, because this is one that we put on. I just want to touch on this real quick. Still has 21 days to go. This was the Iron Condor, or the range-bound strategy. And the goalposts on this one are 350 on the upside and 310 on the downside. It's currently sitting at 330, so we'll keep an eye on this one and watch it as time goes as well. Now, what about AVGO? Well, here's one that went up above the strikes, okay? And so this is one that went beyond the expected move. It actually closed at 631, so it went through both strikes. So that $5 spread hit its maximum value. And so whatever that was, that's $5 minus whatever the credit was, and that would account for the loss on this particular trade. Now, if I go to the account statement, let's see where we sold that AVGO, and that was sold at $1.15. But take a look. I want to share with you what I did here with this in terms of management. So as the day went on, I put an order in because it looked as though the stock was going to close above the strikes in an attempt to buy it back somewhere under its maximum value of $5. And we did get filled at $4.50. So when the stock was a little bit lower, that stock was filled at $4.50 instead of letting it expire and closing at $5, which would be the maximum loss, $5 minus the credit received, which was $1.15, as you can see. So 450 minus 115, that's what, 330, 325, somewhere in that range was what happened here. Now, this is a stock that went beyond the expected move. They had good guidance. They raised their dividend. So a lot of things happened with this stock, and it went higher. All right, I think that's it for our trades for this week. But we have other names next week that we'll be looking at in terms of not only stocks based on earnings releases, but we'll look at some longer dated example trades as well. All right, we're going to wrap up the week there, and stay with us because we're going to be joined by John McNichol, and we're going to talk about a very popular option strategy, the Iron Condor. We're going to talk about how that particular strategy can be slightly modified or tweaked to match an options trader's slight bias. So stay with us. We'll be back with that after this short break.